Hi, welcome to Mortgage Solutions. I'm your host, Mark Rigney, and today we have a very special guest in our studio, and that is Casey Margenau from Remax Distinctive. Casey is the #1 real estate agent in the Mid-Atlantic region and the #1 Remax agent in the world. We are very fortunate to have him in our studio today. We're going to discuss a range of topics from a realtor's point of view. Hi, Casey, and thanks for being on the show today.
I appreciate you having me.
Casey, we're mired in this housing crash that happened about 2 years ago. What impact has that had on your industry?
On the industry or my business myself?
Let's start with your business.
On my business, it's actually been helpful.
Really?
The thing is that in a good market, you don't really need a good real estate agent. You do business with whoever you bump into.
Okay.
And in a bad market, people come searching for somebody that really knows what they're doing and does a good job. Mm-hmm. So I've actually not lost any business. If anything, my business is picking up lately because I have more people searching me out.
Mm-hmm. We are mired in this economic recession right now. In your experience, what do you see in store for the metropolitan area in regards to real estate for the near future?
Well, this whole thing that's been happening with us,
right.
I think everybody goes, oh, this is such a rarity, this is so different. That's a bunch of bunk. I mean, the reality is we go through this cycle continuously through this area. If you look back at an 80-year history, we go in and out of these cycles.
History repeats itself.
Absolutely. Mm-hmm. And if you look at the the mid-'80s, we ran up and the market ran up. We hit a peak in May of 1989. We rolled over.
Right.
It took about 2 years to hit a bottom. We hit a bottom in 1991. We were at a bottom from 1991 to 1995. Mm-hmm. And then from 1995 to 2000, we just crawled out of the bottom.
Right.
And basically, it was very funny. One of the reasons why our market started going up so well in the early 2000s is real estate agents were used to putting a house on the market at whatever the last sales were in the neighborhood.
Really?
And so that was the norm. Mm-hmm. And they didn't see that the market started to improve and that they didn't push them up enough. That's one of the reasons why we had all the crazy things where you had multiple offers on houses and people jumping on them and then going way over the asking price because they were underpricing them to begin with. Now we're in the market kind of in the 2000s, did exactly what it did in the 80s. We went up, 10%, 10%, 10%,
mm-hmm.
20%, 20%, crash. And in August of '05, we kind of hit a peak. Depending on what you were, you could have paid the peak in '06 also, because it took about 2 years before it worked itself down. Sellers don't just drop their price overnight because the market changes.
Right.
It takes a while, just like it takes a while to go up, it takes a while to come down. We kind of hit a bottom in late '07, early '08. The fall of '08, pretty much everything was at a bottom by then. And we've kind of been hanging out at that bottom. In some product, we actually have had appreciation.
Really?
I've had, in the fall of '08, I had a bunch of our clients buy some houses that I saw in a particular area where they were beaten up too bad. They were just strictly investors. They bought them for cash, and they've actually doubled their money already.
Wow.
Which is a rarity. Mm-hmm. Now, the market's still at a very good value in most cases, but we've had appreciation in some product. We still have other product that still has some wiggle room that it could possibly go down a little bit. Mm-hmm. But in reality, we pretty much flattened off in overall market. I just was working with somebody who there was no comps in a particular neighborhood to determine the price of a particular townhouse. It was a relatively new townhouse, 2-car garage. They're all the same. How many ways can you cut the pie? Right. And the real estate agent on the other side was saying, oh, well, the last sales were, a year ago and 2 years ago. And they were saying, oh, how is it? The market's gone down from then. And I did an analysis of 83 properties that had sold over the last 3 years.
Okay.
And the general consensus was, by subdivision, that the market was flat when you looked at the exact same product over and over. So, to me, I believe that this fall, if you want to get into the macros of it, I think that this fall is going to be a little slow. I think a lot of people will be talking about double dip recession and things like that. I think that here in Northern Virginia, that's really not going to come to fruition. We have good jobs. We have housing prices are stable. And I believe that we will see a slow market because of the elections, because there's turmoil in politics. We're in Washington, D.C.
Right.
So then I think that this next spring will be really good. It's going to be a really good market, and things will do very well. But I don't believe that there's any pricing power.
That's encouraging for our viewers. Right now, the short sales and foreclosures are very, very prevalent. How has short sales and foreclosures impacted the way you do your business?
Well, in any marketplace, there's always good values.
Okay.
One way of finding a good value is to look at distressed situations.
I see.
Distressed situations can be many things. Obviously, a foreclosure is a distressed situation.
Yes.
But as a buyer, sometimes getting a good deal on a foreclosure is not the best deal. Just because a great property is a great property and will always sell. A foreclosure usually has a little hair on it somewhere or the other.
Right.
But when you buy a foreclosure, you're taking more risk, and you're supposed to get a discount for risk.
Sure.
When you buy a short sale, it's kind of a medium area. A short sale, you have risk, you have uncertainty because you don't know when it's going to get approved.
From the bank.
From the bank standpoint, you're buying a property subject to the bank accepting the transaction.
Yes,
now
sir.
the bank's going to look at it and they're going to say, am I going to make more money on this transaction versus foreclosing on it, having control and selling it myself?
I see.
So it has to be better than what they would get if they foreclosed on it.
Okay.
But it's going to be better than retail because of the risk that you take. You're usually buying the property as is, but you have a homeowner that's in the property. They're usually maintaining the property to some degree. They actually sell the property. You get a chance to do a home inspection and other things like that. So there's a lot less risk. So you don't get as good of a deal, but you do get a good deal there as well. We're finding that the short sales make sense as long as the parties involved are familiar and understand how to do short sales.
Right.
It's a complicated transaction, and that's one of the areas where you need a good real estate agent. I've got one that's closing Thursday.
So you do recommend short sales and foreclosures to your buyers?
Absolutely, yes. It depends on the circumstances. Let's say that you need to close a house by August 30th because you want your kids in school.
Oh, okay.
You're probably not going to buy a short sale because you're probably not going to know for certain that everything's going to go forward. But if you're in a house and you don't need to sell your house before you buy something else and you just want to get that right deal, it can be a great opportunity for you as long as you have a little patience on closing and working things out. This deal that we're closing on Thursday, we've been negotiating with the banks for a while.
How long?
It's been about, this one's been about 5 months.
5 months you've been negotiating with this bank. 5 months. Boy, that buyer must have a lot of patience.
Buyer has patience. It's a good deal. The buyer's getting a good deal. The bank is getting a good deal. The neighborhood's getting a good deal because instead of having a foreclosure, they have a property that's been maintained by the homeowner all this time. The seller's getting a good deal because they're getting released of their liability. That's the key on a short sale from the seller standpoint, to make sure that you're being released. Sometimes they just let the deal go through, and then you're on the hook for the balance.
Yes,
Still,
we had a show on that as well earlier.
Yeah, you have to know what you're doing from that standpoint. The bank's doing better because they're getting more money than if they were to foreclose. The foreclosure was supposed to happen earlier this month, and they postponed to allow us to go to closing, and everything's working out beautifully. And the buyer's getting a good deal, the seller's getting a good deal, the town and the bank. And if it's a win-win for everybody, that's a good short sale.
That's a balancing act too, isn't it? Yep.
Oh, absolutely.
Yeah.
It's more work for us.
Well, Casey, what tips can you give our viewers who want to currently buy or sell a home?
Well, if you're buying a house right now,
Yes.
I think that this fall is probably going to be one of the last chances to really get a steal.
Oh,
You know,
you heard it here first. Okay. Okay.
I think that this is probably going to be the last hurrah for really, really getting good value. And because by this spring market was very good.
Okay.
But we still have excess inventory. But through this next spring market cycle, I believe that we'll get rid of the excess inventory.
Surplus.
And I think that we'll be in a position where it'll be a more balanced marketplace. It doesn't mean that prices are going to go, skyrocketing up. I'm not saying that at all.
Okay.
But I think the deeper discount stuff is going to be over through this fall. And really, I mean, I listen to my own medicine. I bought a lot of houses over the last few years.
Really?
I've been buying a lot of stuff, and this time I bought a lot of stuff in the early '90s, but I sold it early on, and made a little bit of profit. This time I'm buying them with 15-year horizons thought behind it.
You're hanging on to them for 15 years.
Yeah, and matter of fact, if you look at the stats,
Why 15 years? Why?
because I get 15-year mortgages on them.
Oh, okay. I see. That makes sense.
My horizon's 15 years. It doesn't mean that if the opportunity presents itself and I might sell something earlier.
I see. I see.
The ones that I kept, the ones that I bought in the early '90s and I kept for 10 to 15 years,
Right.
I did so much better on than the ones that I sold in 3 or 4 years.
Okay.
So you learn from the times and what's going on. But from the seller standpoint, this fall market is going to be patience.
Patience. That's the key word.
That you're going to just have to be patient because a lot of people have this mentality that if your house sits around on the market, it's a bad house. And that's not true anymore.
Okay.
And it's a very hard thing to get people to understand, but they're starting to at this point in time.
Okay.
As long as it's priced correctly and it's a nice home in a nice area, then you have to be patient enough to find the right buyer. The buyers don't come in droves like they used to.
Right.
And if it doesn't sell this fall, and you have the patience to be able to wait until next spring, it will, if it's fair.
So there's nothing wrong with the home being on the market 60, 90 days nowadays?
Depending on the price range, of course. Obviously, if it's a lower price point and there's no negatives on the house, then it's probably the price that's the issue.
Okay.
But in the higher price ranges, it used to be, when I first got in this business, 20 years ago, it used to be that if somebody had a house that was a couple $1 million, you expected it to be on the market for a year.
Okay.
So I remember having 3-year horizons on high-end houses. So when a house is on for 30 days or 60 days and people think that there's something wrong, that's not necessarily true. A home is supposed to be bought on a long-term horizon. It's supposed to meet, people should take their time, make sure it's the right thing. I mean, so many people that a lot of the reasons a lot of the problems came during the 2000s is people were making decisions too quickly. They were moving way far out and didn't figure out how long it was going to take to drive to work. Or they bought a big piece of land and didn't realize the maintenance and the care that you have to deal with that. Okay. Or they bought one that was small and didn't appreciate the fact that their neighbors were so close. Okay. Or that they had a homeowners association.
Okay.
So making a good decision should take a little bit of time, and people should take the time to make the right decision so that they make a longer term decision.
Since the housing crash, my industry, the mortgage industry, has faced increased regulations. Some of those regulations regard appraisals. They're called HVCC laws, which limit the